Hello all, I'm James from UNSW's Economic Society and I'm here to give you your O-Week market recap. Firstly, I'd like to welcome all the first years. I hope your first trimester is a great induction to a university. The markets over the past week have been quite tumultuous on the back of an ever-changing geopolitical environment in Eastern Europe and a possibly hawkish Federal Reserve. On to our movers and losers. Meta Platforms, formerly known as Facebook, has continued its storm down from very poor results early this February, having now dropped over 40%. Pundits are quoting increasing expenses associated with the establishment of the metaverse, and the company leaning into its new venture in products which fundamentally will generate less revenue in the short term. Peloton has recovered some of its market share after a disastrous run over the holiday period, dropping in total nearly 70% of its original market capitalization. After significant consultation from McKinsey & Company, Peloton has slashed employees by nearly 3,000 and decided to close many physical stores to lower costs. A leaked presentation from Blackwell Capital early in 2021 went so far as to eviscerate Peloton's CEO, citing everything from lack of qualifications to poor decision-making. Moving on to the macroeconomic review. In terms of market indexes, the Dow Jones ended down 1.05%, the S&P 500 ended 1.93% down, the Nasdaq also ended down 4.59%. The Australian market was relatively subdued, with the ASX 200 ending 1.31% up, and the dollar ended where it started the week at 71 cents on the US dollar. In terms of aggregate performance, the cash rate remains at its historical low of 10 basis points. Inflation, however, is at a 10-year high of 3.8%, and unemployment is still sitting on a lukewarm 4.2%. This week in economic news, the 10-year Federal Treasury note has received a significant bump on its yield well past 1.85%, signaling future hawkish Fed behavior. Some pundits have gone so far as to suggest a rate hike in the near future, completely disregarding the Federal Reserve's plan for rate hikes in early 2024. Either way, it's bad news for mortgages. The geopolitical situation in Ukraine continues to influence global markets, sparking speculation in energy commodities. All embassy personnel and diplomatic staff have been evacuated along with various other nations in the Anglosphere, based on US concerns that the Ukraine faces imminent invasion from the Russian Federation. Amongst all this drama, US President Joe Biden has entered talks with current German leadership regarding the future of Nord Stream 2, a central piece of Western Europe's energy infrastructure, all of which is sourced from Russia. In the event of an invasion, Nord Stream could prove to be a flashpoint for future conflict with Western Europe and NATO's economic bloc. That's all from us at EcoSoc. I hope you've enjoyed your rest of the holidays, and on behalf of the Economic Society, I would like to welcome all the first years to university. Good luck, everyone.